Good morning, and welcome to day 2 of the Black and Latino National Economic Summit. We hope you have enjoyed the valuable information that's been presented thus far. And my name is
Good
Alonzo
morning.
Bell, pastor of Martin
Welcome
Evers.
to day 2 of the Black and Latino National Economic Summit. We hope you have been.
My name is Alonzo Bell, pastor of Martin Evers Missionary Baptist Church, named after Reverend Dr. Martin Luther King Jr. and Medgar Evers. And I'm honored and proud to be one of the board members of the very first Black and Latino-led CDFi in the city of Detroit. And I'm also honored to introduce the man that's helping us to bring this dream into fruition, Mr. Jason Freedman, co-founder and CEO at Freedman and Associates for nearly 30 years. Jason has dedicated his career to increase access to capital in low-wealth communities. After helping to create a more inclusive economic development strategy for the state of New York, Jason led a statewide small business CDC in Iowa and later advanced his practices in micro and small business lending as a director of training and education for the Association for Enterprise Opportunity. He built a consulting division for an inner city CDFi in Baltimore before co-founding Freedman and Associates in 2007. With Freedman and Associates, Jason realized his vision to form the largest team of the most highly respected CDFi industry consultant. Let's welcome our presenter for today, Mr. Jason Freedman. Let's give him a hand.
Okay, I'm unmuted. Good. Thank you, sir. I appreciate that very much. Just to give folks an idea of where we're headed, we're going to do a 45-minute presentation and an overview of the history of the movement of community development finance and its roots, going back to the post-Reconstruction days after the Civil War up until the present day. And then we'll have Dina Harris on as a special guest. And then we will follow that with a panel discussion of Black and Latino-led CDFI CEOs to talk about, to provide an introduction to CDFIs and what they're all about. And then we'll hand it over to Dina for her panel as well. So, hey, Dina. All righty. So, hey there. Thank you.
Hello,
Thank
Jason.
you for putting this together. All right. So I hope we can see my slide. All right, good. So what we're going to do this morning in a very, very brief, 10,000 feet, but really trying to ground everyone who's attending this conference in where this all came from and why the issues, frankly, haven't changed. We've gotten better, but we've got a long way to go. And so we really want to give sense of folks of, as you're doing your work today and building economic opportunity, who are the mothers and fathers of this movement. And any errors and omissions, if I missed anything, are solely mine, not my company's, and you can bring that up with me later. But we're going to explore the modern roots of the movement, going back to the Freedmen's Bank that was started after the Civil War, to Dr. Martin Luther King's Poor People Campaign, to the creation of the Community Reinvestment Act and community development financial institutions, and a few more things in between. Now, and I know that everyone lives and breathes these statistics, but just to be clear about where we're coming from here in terms of the yawning racial wealth gap in this country, that a white middle-class family in the U.S. had about 150,000 in accumulated wealth in 2016, but a middle-class Black family had only 13,000, meaning that Black families have 8.6% of the wealth of white families. And with our Latino brothers and sisters, their median household wealth was close to 21,000 compared to 142,000 for white households, meaning that Latinx families had only 14.6% of the typical wealth of a white family. And so that's the context, that's the situation that we're dealing with and that we're trying to address every day. Folks may not realize that there was an initial effort after the Civil War to begin this journey. The story I'm going to tell very briefly ultimately is about the government's failure to equip former slaves with trustworthy wealth-building institutions in the 1800s, and then the disastrous effect of poverty and racist economic segregation it had on Black banks that tried to move forward and serve their community, moving forward into the 1960s with the very cynical term of Black capitalism that was used by white politicians to deflect attention to the issues, and leading up recently to the Great Recession, right, where Black financial institutions had a very difficult time surviving as well. And so let's talk a little bit about the broken promise of the Freedmen's Bank. So the 13th Amendment, everyone talks about, 40 acres and a mule, right? But the reality is because of the violent backlash of white Southerners and Northern supporters, it was eliminated from the amendment. And instead, President Lincoln signed a provision to establish the Freedman Savings and Trust Company in New York City in 1865. And Black Americans could open up an account for as little as a nickel. Interest was paid on deposits of $1 or more, and more than 100,000 Black people became customers with 37 branches across the South. And you can see there's a plaque here for where the building originally stood, but 9 years later it closed. And the bank's deposits were invested into risky speculative ventures by an all-white board of directors, and over 60,000 depositors lost over $3 million, which is about $68 million in today's money. We didn't have the FDIC back then to insure for those losses, but Congress was obviously concerned about the backlash and authorized bank customers to get 62 cents on the dollar. But of course, the process to do that was onerous and most weren't able to collect. And what folks that are not of the community need to realize is that began to institutionalize the mistrust that many African Americans had of financial institutions, and led to a very large percentage of African Americans that are underbanked or banked. Interestingly enough, though, earlier on in 1907, right, the famous brilliant activist W.E.B. Du Bois started writing about how Black Americans could collectively pool their money and purchase freedom for their community members, going back to 1825. And he actually published a list of the existing Black financial institutions at the time. And this movement of trying to organize Black banks was really the forerunner of the modern day credit union movement that started 20 years earlier. So once again, we have to go back to the roots to know where we are today. We're going to jump ahead now to the 30s and the insidious practices of redlining and racial housing discrimination. But the federal government, when it was faced with a housing shortage in the 30s, started to increase investment, but explicitly designed to segregate America's housing stock. And the new Federal Housing Administration refused to insure mortgages in near African American neighborhoods, and thus that began the practice of redlining. And at the same time, FHA was subsidizing builders who were mass producing entire subdivisions for whites with the requirement that none of the homes be sold to African Americans. And of course, FHA's justification at the time was that, well, property values are going to go down, right? So those loans would be at risk. Well, the reality is that all the academic studies have shown that there was no basis for this claim. As a matter of fact, when African Americans tried to buy homes in all or mostly white neighborhoods, property values rose because African Americans were willing to pay more money for those properties than whites because they had so many fewer choices. So some of the things that have been ingrained in us about how things happened, in fact, were not the case. And so today, African American incomes on average are about 60% of the average of white incomes, but African American wealth is about 5% of white wealth. And we know that the way to gain equity, to build equity in this country, is through owning an asset, owning a home. And this huge gap, a 60% income ratio and a 5% wealth ratio, basically is attributable to the federal housing policy that was implemented in the 20th century. So those practices continued. You think about the Social Security Act, right? Most people don't know that agricultural and domestic workers were left out of that act, meaning a $143 billion loss to the African American community. And we all know about the GI Bill, but what we don't know is that it effectively excluded Black veterans and provided funds for college education, housing, unemployment insurance, and costs Black Americans another $45 billion in lost opportunity. Okay, so we jump ahead to the 60s and the war on poverty, right? And many of you are board members or have been on staff or worked with community development corporations, over 4,000 across the country, many of them faith-based. And they were created as part of the war on poverty. Most of them were involved in affordable housing and still are, but also get involved in other grassroots on-the-ground community efforts to keep their communities safe. And these CDCs grew out of the civil rights movement, right, to fight against redlining and disinvestment in cities. And so that takes us now to the last legacy, part of the legacy of Dr. Martin Luther King, where he launched the Poor People's Campaign in 1967. His idea was that he would initially bring 2,000 poor people from across the country to descend in Washington City and other large communities to meet with government officials and policymakers to talk about jobs, unemployment insurance, a fair minimum wage, and education for the poor and adults. And he saw this as the next chapter in the genuine struggle for equality, believing that African Americans and other minorities would never enter full citizenship unless they had economic security. Well, that movement was cut short by his assassination, but the Southern Christian Leadership Conference decided to move forward with the march. In 1968, Coretta Scott King led a wave of demonstrators of predominantly women. A tent city, Resurrection City, was set up on the Mall in Washington, D.C., but the Interior Department forced it to close in June of '68 after the permit to use the land expired. But the reality is that Dr. King's legacy in terms of the poor people's movement continues today.
The Reverend Dr. Martin Luther King Jr. was a Nobel Prize-winning civil rights leader, a minister, and an activist. Did you know he also fought for economic equality in the U.S.? 10 News reporter Phil Buck shows you how his legacy lives on today.
We all know the famous "I Have a Dream" speech. It's the first thing kids learn about Dr. King in school, but Martin Luther King Jr. fought for much more than just civil rights. Toward the end of his life, Dr. King started an even larger movement called the Poor People's Campaign, and it's a movement that still continues today.
We face many of the same issues of racial discrimination, but also economic discrimination, and that we really only live up to that dream that he had when we address all of them.
While most of Dr. King's legacy focuses on not judging people by the color of their skin, but on the content of their character, the Poor People's Campaign calls for more radical and controversial change, addressing economic injustice across the country.
That became a threat to the economic engine here in the United States because Dr. King was calling for fairness. He was calling for a revolution of values in America. And we see that those values haven't changed, but if anything, they've gotten worse, where people blame the poor for being in poverty without looking at policies and legislation that has created an imbalance.
Today, the Poor People's Campaign has regained momentum with efforts to build toward a mass Poor People's Assembly and moral march on Washington in June of this year. a fitting tribute to one of Dr. King's most valued causes.
Dr. King's
Okay. And so as we move into the civil rights era, get back to my slides. Okay. The third platform of the Civil Rights Act of 1968 was the Fair Housing Act, which prohibits discrimination in the sale, rental, and financing of housing based on race, color, national origin, religion, sex, familial status, and disability. Now, since the passage of that act, many people have won legal cases over housing discrimination, and there's also been an increase in accessible housing available to individuals. And actually, in the Obama administration, the definition of fair housing was broadened to include more people. But it's safe to say, obviously, that many people have not been able to take advantage of successful cases, of getting their cases litigated. And just in 2017 alone, more than 28,000 complaints of housing discrimination were filed across the country. President Johnson, as Dr. Martin Luther King and Robert Kennedy, who really understood what was necessary in order to help African Americans achieve full economic equality, he commissioned the Kerner Commission at the end of his term to look at examine the race riots, and that report has a quote that I think should be played over and over again. And he says, what white Americans have never fully understood, but what the Negro can never forget, is that white society is deeply implicated in the ghetto. White institutions created it, white institutions maintain it, and white society condones it. But of course, as we know, Lyndon Johnson declined to run for another term, which led to the election of Richard Nixon. And in order to secure the support of white Southerners and to oppose meaningful economic reforms proposed by Black activists and the Black Power movement, Richard Nixon adopted the term Black capitalism, a very vague, ambiguous term, which basically said that his solution for racial ghettos was not economic justice, but tax breaks and incentives. With little federal aid, it placed the, quote, Black problem, the problem of poverty, in the hands of Black entrepreneurs to fix it all by themselves. And so that vague, ambiguous term meant something to everyone, got him elected, and then, of course, nothing ever came of it. But the winds of change were still blowing. All of you have been out in the community all during those years, fighting the fight for racial equality and economic justice. And that led in the 1970s to the creation of the Community Reinvestment Act. And obviously CRA is front and center of this whole entire conference, right? In terms of what we should be doing to address economic injustice. And so more than 30 years ago, before the passage of CRA, very few banks made meaningful numbers of loans to people with low and moderate incomes, right? We've talked about redlining. And whether because of racial discrimination or fear of credit weaknesses, right, redlining occurred. And what we experienced, right, especially after World War II, was inner cities that were islands of urban blight, whose residents had limited or no access to capital, and the prospects for breaking the cycle of urban decay were near impossible, except through direct government investment. And so one of the legacies of President Carter is that he signed the CRA Act in 1977, with Congress saying very clearly that banks have a continuing and affirmative obligation to help meet the credit needs of their local communities and LMI neighborhoods where they're located. It was a first step, but students of this know that it really didn't have a lot of teeth in it. It was intentionally vague about the standards regulators should use in their evaluations. So it sounded good, but it was a compromise, but it was a first step to build on. And there were a series of regulatory changes over the years. One that's tangentially related, not to CRA directly, but that was in 1986, the creation of the Low-Income Housing Tax Credit Program, which has been extremely successful in spurring affordable multifamily housing development. As far as CRA, there were a number of statutory amendments that were made in response to complaints from both activists and bankers. And so in 1989, the first prong was to require regulators to publicly disclose bank CRA ratings and evaluations. So now we know who's working it, who's trying to work it, and who hasn't gotten the message. And then in 1993, President Clinton asked the regulators, FDIC, OCC, et cetera, to reform it, to basically make the examinations more consistent, clarify the performance standards, and reduce the costs associated with compliance. And so the next round in 1995 streamlined the review process for small banks, but most importantly, it established criteria to assess the performance in lending and investments and services in LMI communities. And this was a watershed because what it led to was progress, that all of the studies that have been done on CRA, while it's not perfect, is that they show that CRA has succeeded in increasing lending in low-income and moderate-income neighborhoods. Clearly, we don't see wholesale transformation, but we see improvement, and most bankers have gotten the message and understand that in reality, just because you're low income doesn't mean that you're not a good credit risk, and that there are ways to, as we'll talk about, to provide ways to support low-income borrowers to make their payments, but most importantly, achieve their dream of owning a home, starting a business, financing education. And so the lessons are clear. Underwriting for low-income folks can be done in a way that is appropriate and it has proven true all over the world when you think about Muhammad Yunus in India and other movements. And what also happened at the same time when President Clinton enacted that last CRA reform, right, which was providing incentives to banks, it tied it to the creation of the Community Development Financial Institutions Fund, which is a unit of the Treasury Department that is designed to promote economic revitalization and community development by investing in community development banks, as they can be called, through equity investments, capital grants, loans, and technical support. And when that act was revised, basically it gave qualified, it basically said to banks, you make investments in CDFIs, you get the maximum points that you can get from the regulators as part of your community development investments. And that ushered in a wave of investments that has continued today from financial institutions, big, medium, and small, because they see CDFIs as the mechanism, as the entity to partner with to get capital out, because these organizations, as I'll explain, understand and know their communities. And so today, while I do that, we're just going to pull up another quick video for you. dedicated to delivering affordable lending to help underserved communities join the economic mainstream. And here's the key thing. There's no handouts here. CDFIs finance credit-worthy individuals and projects that are beyond the reach of conventional financial institutions. And that's a major point. And how do they do it? Well, they are masters of taking public and private and philanthropic money and making it fit to offer affordable and sustainable financial services that support wealth accumulation, neighborhood revitalization, and economic growth. And they are the leading partner for banks, foundations, social investors, local, state, and the federal government engaged in community development. And they do it by using business discipline, banking principles, but tailored to the needs of low-income borrowers and providing the supports necessary to help them succeed. Okay, and CDFIs are every size, shape, and form on Native reservations in the District of Columbia, working with African Americans, affordable housing in Omaha, Latino Economic Development Center, also in the district in Minnesota, Meta in the Twin Cities, Justine Peterson in St. Louis. And where that's all come down to today is $3.9 billion of investment just since 1994. Over 1,000 CDFIs, which are predominantly loan funds, credit unions, banks, and others with assets totaling over 173 billion, and have an outstanding portfolio of over 141 billion. And here's most important for today is that over 65% of CDFI's financial products, their loans, more than 92 billion, are deployed in their target markets, meaning low-income individuals, people of color. Okay, well, we're doing good on time, and I want to step back. I want to thank you for that very broad, brief overview. I hope it was helpful. And again, any omissions and errors are on me, so please let me know. But I want to bring in Dina Harris is our special guest. Are you there, Dina?
I'm
Good.
here.
Hey.
Looks
All
like
right.
I'm moving slowly, but I'm here.
You're there. Well, no problem. But Dina, who leads the National Faith Home Buyers, has, with her organization, helped over 5,000 families purchase homes or continue to stay in their homes since the program's founding in 2011. And I asked Dina to be on this kind of kickoff session because Dina and her team are in the process now of forming a CDFI that's focusing on Black and Latino homeowners. And so it's really exciting to bring Dina in. We're working with her now to realize her vision and her team's vision. And so, Dina, I just wanted to step back. Welcome.
Well, thank you for having me, Jason.
And so, look, you've been in this movement for a long time. You could have run this session without me. But what factors led to the decision of your team to say we need to pivot now? We need to create a CDFI and get this done. So,
well, Jason, for me, first of all, I have to acknowledge that the people you see around us on the screen were participants in this process. But I think that the thing that really kicked us off was the George Floyd murder. Okay, when George Floyd was killed, I was sitting at home and hiding from the COVID virus, and I was really frustrated. I had been frustrated for several years because many of the people that we work with could not access credit. Okay, many of the families we work with couldn't get a house. Okay, and I had watched some extraordinary things happen, and I felt like more of a person just watching things go by and not really participating or challenging or advocating. And I think shortly after George Floyd, I started seeing news articles that said billions pouring into Detroit to help Black people, okay, and people of color. And 6 months later, I was like, where'd the money go? No, none of us ever saw it. No Black person saw it. And so then there were groups coming into our town that were offering to represent us. Okay, but I really felt like they were just using us. Okay, because they ended up with the money and we ended up with the pain. So I met this really great guy, Al Pena, who sort of gave me a little advice. And he said, Dina, you're probably going to have to help save yourself. You're probably going to have to help your community. And so the people that you see on the screen and many, many more start calling me and saying, what can we do to help our community? And so we created 2 organizations. The first was the CDFI. The second was a group that will train people to be prepared for the CDFI, okay? Because it's not just starting the CDFI, but we've got to position our people not to fail and our CDFI not to fail. So that's what got me here, Jason. That's the long version. Oh, and Jason, you're on mute.
Thanks. So, tell me about the initial focus of this emerging CDFI. Let's talk about who are what's the profile of your borrowers and what types of financial products and support do you plan to provide?
Well, the initial platform, the initial borrowers our target market will be Black and Latino families, customers, entrepreneurs, and our goal will be to loans to small businesses and housing developers. That's our first target market. And thanks to you, I mean, the best thing we ever did, honestly, was to hire a consulting firm that had a great deal of experience in setting up a CDFI, which made our job a lot easier. I would tell you that we're about to do our first 5 loans, and I think then we will be ready and have completed the process of getting the CDFI done.
Yes.
Yep. Yes.
All right. Good news. That's what everybody wants to hear.
Yes.
So right now, in terms of the process, and you alluded to, so you formed an entity that will be applying for certification, and
Yes.
as you alluded to, in order to be certified, you need to make just a small number of loans over about a year's time to show that you're functioning as a nonprofit lender with a social mission, and you've got a board of directors.
Yes.
Right?
Yeah, absolutely.
Explain how, for those folks that are learning about CDFIs, obviously you're going to provide the capital, but the thing that also distinguishes CDFIs from banks is that banks, because of regulatory issues, they can't provide counseling and technical assistance, but that's what CDFIs are there for. So talk about how you're going to do that. Are you partnering with any other organizations? How are you going to provide that kind of initial education and then work with folks on the back end?
Absolutely. The other thing, Jason, I will be remiss in not doing is not acknowledging the banks that gave us initial funding to get this CDFI off the ground, and Huntington Bank, they just stepped up to the plate and funded us immediately. Right off the bat, they came in and funded us. And then Chase and Flagstar joined them in committing to funding this CDFI, just a startup capital. Okay, since that time, we've had quite a few other funding sources say we want to fund the CDFI. Now, the things that we need now are, of course, we're still creating a loan committee because, I think it's important to have 2. Okay. And there are so many other partners, Pastor Williams and Pastor Bell and Pastor Pearson. And we are not a faith-based CDFI, but, these were just really wonderful people that, stepped up to the plate and said, Dina, how can we help? They brought teams of people with them. National Faith brought teams of people, and it just started turning into this huge group of people that became committed. Okay, I have to acknowledge Gary Torgo, who I think was an inspiration at Huntington. Bina Elliott over at Chase, again, and you'll hear from those from Bina and Latrice from Huntington, and you'll hear from Bev Meeks at Flagstar this afternoon at 1:00. And so because you also need to know what the banks are expecting if they're going to fund you or be your partner.
Exactly. That's right. That's exactly right. Well, thank you, Dina, and thank you for the background and your comments. And we do have a few minutes before we go into the next session, so I'm happy to open it up if there are any questions from the public. We do see a lot of folks on, and that's very heartening. But if Alonzo or Patricia or Charles, any other Al, anything to add or here and take questions.
I just say that first of all, I think I hadn't really understood the financial tool of the CDFI until I had the opportunity to discover and really unpack this with Dina and with Al. And then really, because I was very clear about the issues that you talked about in regards to the Freedman's Bureau. I'm very clear about all of the institutional letdowns that Blacks and Latinos have faced from the time we've been here up until present, right? In so many cases, right? And so realizing that there was a tool that was available to us that would help us provide access to capital to our community, it just became very important to me that we put this together. And I say this to say that at the same time, while we're putting this together, I just helped another pastor close the last Black credit union, Black-owned church credit union in the state of Michigan, which we all had credit unions. King Solomon had a credit union, Bethel East, and you can just go on and on and on. But we've been kind of forced and pushed even by the credit union industry to lose those credit unions or to merge those credit unions, oftentimes into credit unions that are majority white boards that have been doing business to help their folks for a very long time. So the CDFI couldn't have been more on time. It couldn't have been more on time. I'm so excited about being able to help folks as they transition out of COVID. I've said it on many occasions that there are so many people, and some of you all are watching are landlords in some sort of way, whether your organization is or what have you. But there are so many small landlords who are saying, man, look, I'm just trying to get out of this property. And if I can get out of this property by, helping this family have a house, and I can get some finance for the effort that I put in, I'm okay with it. So there are some doors that could be opening up for us over the next couple of years. And I'm looking forward to making sure that this tool is available to folks in neighborhoods and communities who've been long looked past.
Thank you.
Jason, also, there are a couple of questions in the chat. One of them I thought was interesting.
Okay. Well, I'm not seeing questions yet. Folks will get a copy of the presentation, and
yes.
If anyone would like to talk to me privately, you can just send me an email at jasonj@freedmanassociates.net, and that's FRIEDMAN. But this is not about me. This is about the group right now. But if anyone has a specific question.
Well, while you're looking for those questions, I just want to acknowledge again that I'm standing on the shoulders of many, many people in Detroit and in Michigan that have stood with us And there's so many people that want to borrow money to start their business. I can't tell you how many emails and phone calls we've gotten. So, we're excited to see this come off the drawing board.
And by the way, I do see a couple of questions. I'm happy to talk to folks offline about the qualifications of being a CDFI and all that good stuff. Happy to give anyone all the time they need to get the facts. So happy to do that. But it does look like we're going to be transitioning to the next session. And so I want to thank the folks for sitting in and providing me with moral support and lessons learned. And Dina, thank you again.
Thank you, Jason. It's been a pleasure working with you.
All right. So I think what we'll do is we're just going to go ahead and segue right to the next session, and we'll have some other panelists coming on. So we'll just wait a second. Okay.
Jason.
All right. Hello, Lenwood. All right. Hello, folks. Hi. We're just going to go ahead and segue to the next session, and we're going to be bringing on some panelists. We're going to do a short presentation, and which is focused really on CDFIs and community development finance to further ground people in the movement. And so for time purposes, I'm going to go ahead and get started as the panelists come on. So we're joined here today by Dion Alexander, who's the president and CEO of Village Capital Corporation in Cleveland, Ohio, and Marjorie Neems Galarza, the interim executive director and CEO of the Latino Economic Development Corporation in Washington, D.C., and Mr. Lenwood Long, the co-founder of the African American Alliance of CDFI CEOs, and Thiru Vignarajan, who's the CEO of Capital Plus Financial in Connecticut. And these are all leaders, Black and Latino CEOs and executives of CDFIs. So want to welcome you, and we'll be bringing on the panel in just a minute or two. So our purpose today is to review the goals and the purpose and the impact of CDFIs and how they exist, in the words of the Treasury Department, to create an America in which all people and communities have access to the investment capital and financial services they need to prosper. We're going to explore why CDFIs are different from conventional institutions, whom they serve, the products they offer, how they're funded, and the impact that they're realizing. And we're going to be joined by an expert panel to talk about what it meant to create and launch their CDFIs and the challenges that they're having today in being able to obtain cheap capital to be able to then make loans and financial services and products available in their communities. So, hey, Marjorie. Hey, Dion. All right.
Apologies for my background.
It's all good. It's a nice background. So just very briefly, Freedman Associates, we are a consulting firm of practitioners who have been in this movement for 30 years, former CEOs and CFOs and directors of lending that have come together with a passion and a mission to help build and grow remarkably successful CDFIs, because our clients finance economic justice. And we help folks build and create CDFIs across the country and help them capitalize them and get certified, and then launch, help them to be able to scale up and have more impact. Okay, so while we do that, we're just going to go ahead and we'll play a short video, because you know I like videos, those of you that have been on. I will get off the mute. So as we talked about in the last session, CDFIs are private financial institutions, primarily nonprofits, that finance credit-worthy individuals and projects that are just beyond the reach of conventional financial institutions. I love this quote from Brett Theodos at the Urban Institute, because he really nails it. As mission-driven, mission-oriented financial institutions, CDFIs often need to create a market for people and businesses and places not used to having access to capital. That's what we do. And they do it by blending market rate and subsidized funding sources to offer affordable financial products. And CDFIs are as smarter than banks, because we know how to manage risk by keeping adequate loan loss reserves and equity capital. We monitor our portfolio with religion. And most importantly, we are there for the borrower, both helping them access that financing and at the end to help make sure that they are able to achieve their financial goals. And just like a bank, we expect to be repaid, but we know our clients. We are in the communities. We are of the communities. And as a consequence, we are very focused and market driven. So when African Americans and Latinos were shut out of PPP, in came the CDFIs, right? When it was clear that still huge numbers of businesses and entrepreneurs were not getting financing, banks, major philanthropic organizations, local, state governments, the CDFi Fund, more money. Where did it go? It went to CDFIs, because they knew that they could get the money out responsibly and support their borrowers, and to try to stave off the crisis that was going on in local economies. Now, where do they get the money from, right? Because they don't print it, and they don't get it from the Treasury like the banks do. So they get it from public and private sources. And these numbers are, probably a little, maybe a little off today. Maybe there's more money from the government, but the reality is about a third of it can come from banks, and about 15% from government. Corporations like Starbucks and HP and lots of other companies have invested in CDFIs. Philanthropic organizations, religious institutions and foundations, and individuals. And as you can imagine, though, the challenge of an executive of a CDFI is that all these funding sources have different requirements. We got to make them all fit so that we can provide a uniform source of capital to our borrowers, low cost, safe, and affordable. And if anyone may need to just put themselves on mute just for background noise, that would be helpful. So people ask me all the time, how would I know the difference between a CDFI and a conventional financial institution? Well, mission, right? As we've talked about. It's not just about providing low-cost capital. It's about people that are in the streets that have a keen understanding of the barriers. And we all have talked about that this morning, and we'll talk about it for the rest of the conference, systemic, institutional, and racial, that have prevented fair and equal access to capital. Banks are focused on generating profits to satisfy their shareholder expectations. And so today, the second difference is, in terms of structure, CDFIs can be banks. There are banks that are certified, credit unions, loan funds, some venture capital funds, but a majority of them today are nonprofit loan funds and credit unions that have gotten the designation from the Treasury, that seal, that quality seal, which is the signal to the funding community that you are invested in your community in providing safe and affordable financing. And obviously, banks work differently. They're structured to maximize profit. Banks will offer higher fees and interest rates for people with lower credit scores, limited or blemished credit history, and minimal assets. So what's another difference? Financial products. Well, CDFIs fund startups, nonprofits, community facilities, daycare centers, healthcare centers, micro and small businesses, affordable housing, consumers, and commercial real estate. And these are largely fixed rate and self-amortizing with lower origination fees. And this keeps payments predictable and allows borrowers to decrease the principal so they're actually paying off the loan at the end of the term. And for housing and consumer and commercial real estate loans, the terms offered by banks can be restrictive, right? Because they're maximizing their profit, and small loans under $250,000 require the same amount of effort to originate and monitor. And so as a result, the fee structure and the terms are less than desirable for our customers. And we work with, right? So in our underwriting, as we'll talk about, the underwriting of these organizations, they're working with borrowers that may have lower credit scores or minimal credit histories, right? Startups have less assets and may not have collateral. CDFIs don't rely on just FICO scores to assess credit worthiness. We're looking at credit history, right? There may have been a blip, there may have been an issue, but since then things are good. But maybe someone doesn't have enough credit lines open to establish a proper credit score. And banks, as we know, are traditionally driven by the credit score algorithm. Another big difference, we talked about it before, is that CDFIs invest in their borrowers throughout the life of the loan. It doesn't end when you get the check. It starts with financial education, home ownership counseling, small business education. And after the financing, CDFIs can offer themselves or through their partners other additional supports, mentors, coaches, and other programmatic resources that are designed not just to make sure that the borrower repays the loan, but more importantly, that they thrive, that they grow their business, that they stay in their home, build equity, maybe eventually sell it and buy another home. So obviously traditional banks can't do that because of regulatory issues. And that is a crucial difference with CDFIs. And flexibility, right? Everyone in this group can talk to you about stories about borrowers that missed a payment, that had a problem, a landlord issue, something came up, they can't make the payment, where banks may not be as forgiving. CDFIs, because of the relationship, can work to restructure the loan, defer payments like what happened in the pandemic, loan modifications, whatever we can do to help keep that going, right? And to help the business owner survive. And that's the story that hasn't been told enough about the pandemic and about the small business community, of how so many businesses were able to survive because of they worked with CDFIs. Okay, so governance. Governance is key. The governance of a CDFI contains people that are of the movement, that represent the community that they're serving. And that may be government, it may be other nonprofit organizations, faith-based organizations, folks that are on the ground working to revitalize their communities and support them. And so as a result, as you could imagine, CDFIs, both at the governance and at the staff level, have to understand and embrace the tools, the differences between operating as a nonprofit financial institution and a commercial bank, and how to be able to manage that effectively. Okay, impact. Well, what kind of impact are we talking about, Jason? Well, 3.9 billion since 1994 has been invested in CDFIs. Over 1,000 organizations, almost 175 billion in assets, and the portfolio right now is about 141 billion. And here's the most important takeaway. 65% of CDFI's financial products, the loans, more than 92 billion, are deployed to low-income African American, Latino, Native American borrowers. So if there's a mystery for anyone about whether CDFIs are having impact, the data doesn't lie. And so the reality is, this all sounds wonderful, but the truth is we're here today because we know that there's a yawning racial wealth gap. We talked about it in the last session. Even when controlling for factors of firm characteristics and performance, Black-owned businesses are still 20% less likely than white-owned businesses to obtain a bank loan. And for Latino businesses that applied for bank loans over $100,000, only 20% got those loans compared to 50% of white-owned businesses. And we're looking at loans of all sizes. The percentage changed, but not the gap. Among Latinos, 51% receive loans versus 71% for whites. And so with that, what I'd like to do with that short overview, and please feel free to put questions in because we'll definitely get to them. We've got plenty of time with our wonderful panel. What I want to do is just briefly introduce the organizations that you're going to talk to today, so I can get out of the way. We have Marjorie Nemes Galazia, who is from the Latino Economic Development Center in Washington, D.C., and also covers Maryland. And their mission is to drive the economic and social advancement of low to moderate income Latinos and other underserved communities by equipping them with the skills and tools they need to achieve financial independence and become leaders in their communities. LEDC is a mature, robust CDFI. They offer business loans of as small as $1,000 up to $250,000, with, as you can see, very competitive rates and very favorable terms. And that wouldn't be enough without the business advice that they have from workshops that they do. And the lesson of CDFIs was, how do we do training workshops during COVID? And we all embraced online platforms. And you know what? We always would have a struggle getting folks to leave their business and come visit us for a workshop, right? Because, I can't leave my business. But with COVID, we found that the numbers of folks that got on a Zoom call to learn about how LEDC and Capital Plus Financial and Linwood's Group and Village, the numbers were huge because people were in their homes, but they were eager to get the advice that only a CDFI could provide. And they also provide credit building. And that's an important component of many CDFIs who, as a first step, are looking to help improve the credit scores and the credit standing of their borrowers in order to be ready for a loan. And so That's what LEDC does, up to 36 months, right? With as little as $500 with a 0% interest in financial education. And if that wasn't enough, LEDC, because they have been an historic advocate for fair housing and affordable housing in their communities, provides homeownership counseling and affordable housing preservation and tenant organizing. And they do an amazing job. And we'll come back. And you can see their impact numbers just in 2020, over 3,500 entrepreneurs served, right? 3,800 hours of counseling, 2,000 folks went through training workshops, 211 microloans of over $4 million. It goes on, right? And the numbers are important, but what's even more important, and I know that Capital Plus Financial is excelling in this, is investing in the systems to be able to track outcomes, and not just, right, the number of units, the number of loans, the number of bodies, but long-term outcomes to demonstrate that but for this financing and support, this person may not have been able to succeed with their financial goals. And so you can see here just the tremendous numbers that they're able to produce. 89 families in 2020 able to purchase their first-time home. $750,000 in rental assistance, right, to 210 households. I mean, again, and the presentations will be available for folks, and you can certainly go on LEDC's website. And the advocacy work that they do to pound on the doors of regulators and governments to fund affordable housing preservation is just astounding. So, okay. And I was talking about Capital Plus Financial, and Thiru is here, and they are a relatively new CDFI. The organization has been around for many years, but they are dedicated to enhancing the quality of life of families in their mission by providing opportunity for home ownership through residential mortgage loans and other educational services. And their niche is very specific and very important for this conference because they work with the Hispanic single-family residential market in Dallas and Fort Worth, Houston and San Antonio. Big markets, big need. And they got certified in 2017. And they provide a loan with no closing costs, with a full-term fixed-rate loan, 30-year financing. And when you dig deep into the numbers, you're talking about a $200,000 starter home, right? Starter home in most MSAs in Texas. And they are able to afford affordable housing at almost 40% below this figure. What else do you need to know? Other than someone can write them a check, right? And they do, as they're all CDFIs, personal financial education, very committed to, frankly, best practices and lessons learned and what it takes to teach current and subsequent generations about how to think about financial decisions, modify behaviors to become financially secure, and avoid debt. And the numbers speak for themselves. They have implemented a tracking system to go deeper and really assess changes in behaviors and attitudes. I really encourage you to go to their website so you can pull out their annual report that shows how they track metrics and how they're building this system. Because the reality is a CDFI is only as good as the outcome data, the impact data that it can produce to show that these public and private and philanthropic investments are making a difference. 94% of their clients were able to keep their homes during the pandemic. In 2020, 35% of the loans went to women. Their annual portfolio retention is 97%. 78% of their clients are first-time homeowners, right? And so, and the metrics go on. And so they have a very clear methodology. They want to make sure that stakeholders see the change, that they use that impact data to make as a feedback loop to make effective decisions so that they stay market driven, to build trust and accountability. Again, showing and proving that you can do the work is what binds you to your local stakeholders and community and inspires funders and investors. Okay. To the point where they're doing surveys, right? How has your life improved since you've moved into this house, right? And overwhelmingly, folks are saying that my family is experiencing higher safety, and also this house has proved to be a good long-term investment. So they are tracking how folks feel and about the investment and how it's helping to spur them on in terms of increasing their financial security. Okay. And in 2020, they were able to serve 141 families. They've got over 1,300 active households right now. They've invested 19.4 million just in 2020 in improving homes and neighborhoods. And you can see there in terms of the number of housing units improved, financed, and new housing units constructed. So remarkable success for an organization that was certified in 2017. And we're going to hear more from Thiru about what the challenges have been in being able to pull that off. And very proud also to have my friend Dion from Village Capital. She is a warrior in this movement, also a recovering banker, has been on all sides of the movement. VCC was founded in 1992 in Cleveland, in Northeast Ohio, to invest in the revitalization of underserved communities. And like all CDFIs, they provide socially responsible and responsive loans to finance commercial real estate assets to improve the quality of life for residents. So their target market is the city of Cleveland, and much of their lending is focused on the city's most underserved neighborhoods, communities of color, and small and women and minority-owned businesses. And so in terms of their financial products, they're also a heavy hitter. Loans range from $500,000 to over 1.5 million at a 5 to 7% interest rate. They do construction loans for commercial real estate and related projects. They'll do construction loans, interest only during the construction period with repayment upon completion. You can see the terms, very favorable terms and rates. They do that with permanent financing as well. And here's the thing, right? When you see a construction loan interest only during the construction period, what does that tell you? Well, it tells you that they're trying to minimize, they're trying to make it as easy as possible for the borrower in the construction period to pay that loan and just pay principal, interest only during that phase. And that is, again, the hallmark of CDFI. That's the difference, right? Being able to have that flexibility and respond on demand. I could have 5 or 6 slides for Dion's products, but she also does a bridge line of credit, right? Which is so unique, right? Because many times you can't get that bridge loan initially before project revenue comes in. And they do this really cool program with minority construction contractors where it's a short-term revolving loan for small minority-owned general contractors who are acquiring or rehabilitating for sale residential real estate. And this is a pilot project that Dion conceived of and has launched and has helped to get funding, includes training and support for these contractors, right, to build a core robust group of minority contractors that can compete for public and private projects. Very exciting. And, you know, again, these folks are a heavyweight CDFI, 120 million in real estate development loans, leveraging over $1 billion in total development costs in over 200 separate projects. And these numbers, right? 8,100 residential units. And just in 2020, 9 million in real estate loans to 15 borrowers, half of whom were minority businesses, creating or preserving 75 affordable housing units. And they also financed in their spare time 2 community facilities that collectively served over youth from distressed neighborhoods. So Village Capital personifies the market-driven CDFI. We're doing commercial real estate development, but we need to also build a base of minority contractors to get into those projects. We also need to focus on projects in distressed communities that can support youth and daycares and others. And so again, the hallmark of a CDFI is being market-driven and flexible. And then we have a special guest here, Mr. Lenwood Long, who has two hats, or he comes from two diverse backgrounds, rich backgrounds. He's currently the executive director of a relatively new organization, the African American Alliance of CDFI CEOs. And it's a membership organization of 56 Black CDFI CEOs that is working around the clock to build the capacity of Black-led CDFIs and to build bridges to economic stability, well-being, and wealth for Black individuals and families and communities, and build power in the Black community by challenging and influencing, and Lenwood does that very well, influencing financial sectors to operate more equitably. So this is a membership association that had to come together to say, we need to organize ourselves here to get a common message out to the funding community, to politicians and stakeholders about the fact that we are here, but we are undercapitalized and we need support. Demand is at an all-time high, and yet we want to do scale up responsibly and with real mission impact. And Lenwood has helped create this organization. And he was also the CEO of a CDFI in South Carolina. And so he brings his expertise in scaling up a very successful CDFI in the South. And so they are now able to leverage, right, the collective brain power and intellectual capital of all of these folks to focus on this issue, to close the wealth gap, and to identify opportunities that frankly are going to lead to greater investments in Black-led CDFIs. And that's a fancy way of saying is to sit down with the donor and funder community and be able to talk about long-term, low-cost or no-cost investments in capital and operations to be able to scale up. And in just a short period of time, they've done a great job. They authored a fantastic document, a letter with other organizations that spelled out the need and demand to support Black businesses and Black-led CDFIs, and their collective advocacy efforts influenced a $12 billion set aside for minority and minority-serving CDFIs and minority depository institutions. So you want to talk about cause and effect. They're collaborating with another CDFI that focuses also on outcome metrics to develop the African American Equity Impact Scorecard, right? A tool to help funders and CDFIs better measure the impact of their financing in Black communities, because impact equals capital. And they've developed a women-led initiative within their cohort. And just like we've heard with other folks, they're developing a technology platform to provide integrated low-cost servicing and underwriting for the members of those CDFIs. All right, enough. I wanted to get the folks introduced, but the reality is I want to have a conversation. And Lenwood, please speak on behalf of your work with the association, but also, frankly, in your pioneering work in South Carolina as well. And so, first question that we have for the panel is to kind of remember the early days as much as you can, or those that were there. What were the factors or issues in the communities that you were working with that led to the creation? What was the push to do that, and what were the barriers that you faced originally? And so we'll go with seniority here, and we'll go with Lenwood. Can you do that, my man?
Okay, I will not personalize that, but certainly, Jason, thank you for a great introduction to the CDFI industry. As much as I love South Carolina and I call them our sister, I'm actually a product of North Carolina. And so to my friends in South Carolina, I'm not hating. I just like to honor where I'm from. So North Carolina is the place. I have, I've been in love with the CDFI industry for a number of years. I won't say how long, but it has been a number of years. And I think to your question, given the evolution, even when I began to recreate and rebrand the Carolina Small Business Development Fund in North Carolina, which was a intermediary that was focused upon CDFI credit unions, primarily Black-led. And to see that transition, it really emanates from the barrier around, we know it very well, inequality and inequities and in capital to help grow and develop those CDFIs. And I think when you look at the African-American Alliance of CDFI CEOs, I think that was the same emphasis for creating the alliance. One, we looked at the balance sheets of CDFIs, white-led and black-led, and we saw that there was a difference. Hope Institute has looked at and say the balance sheet of black and brown compared to white-led CDFIs is 6-1. I say it like this: you go to Chick-fil-A and you get a combo, and I get a small fry, depending upon where I'm hungry or thirsty. And so it's this inequality, this inequity, the inability to look at this equal distribution of capital in a way that all CDFIs grow. And so it's out of this spirit of inequities, out of this spirit of coming together, of common voices to influence legislation and to influence, I think, programs that fail to look at this unintended consequence of inequality in the application as well as the deployment of resources. So Jason, that's my perspective. I'm quite sure this esteemed panel will have other comments around that.
All right, thank you. Hi, Dion.
Good afternoon.
Good afternoon.
So I think for Village Capital, we come from a perspective, our parent company is a community development intermediary. And we started out by building the capacity of community development corporations to better serve their communities. But in providing capacity and building those organizations, we realized that capital is really key. So we were providing, like a doctor providing a prescription, we were telling people, you're sick, stop being sick. So there was only so much work we could do with them without providing them the financial tools to be able to do better and deeper work in the community. And from building off of our experience with CDCs, Village Capital actually finances both for-profit and nonprofit entities who are doing social impact development work in our communities. So while we have largely been around construction and real estate development, it is a people and place strategy that is now developed into additional small business lending. But I think one of the value adds of CDCs and CDFIs and development entities is that we listen to our community. There is not a prescribed methodology. There is not a single product. If you have seen one, you have seen one. You have not seen them all. And so we are nimble and we can be on the ground to evolve with our communities and with our stakeholders and with our residents to develop product that meets their needs and helps all people thrive in the places that they live.
I think you're muted. Yeah, I read your lips. I'll go with that. So LEDC was started in 1991, and it was catalyzed by an issue we still see today, right? So there was a police brutality incident against a Latino male in what's known as Mount Pleasant neighborhood in DC. This is a really diverse neighborhood. There had been a lot of tension between the police and the Black and the Latino community. And at that point, a lot of Salvadorans were moving to DC. So folks were fleeing really desperate situations, thinking they were going to come to the United States. and finally, see the gold paved roads and the jobs were, gonna start pouring in for them. And none of that happened, obviously. So as the tension grew between the Latino and Black community with the police, and this incident happened, it led to days of riots, right? And at that point, DC government realized and decided that they really had to start paying attention. And so they commissioned a study. The study concluded that Latinos, in fact, were being discriminated against. Shocker. And so they rounded up the Latino advocates at the time in the early 90s and told them, fine, here are some grants. Figure it out, right? Solve your community's problems. So the group of advocates that created the Latino Economic Development Center thought the most appropriate interventions were around asset building within small business development and housing. And so early on, LADC began providing small business technical assistance. It wasn't until later in 1997 that they started to dabble with financing, but immediately they started to also organize tenants in the city to try to strengthen housing policy and began providing housing counseling. So over time, LADC has been trying to build its capacity. Its financing really didn't take off until around the Great Recession, and even then, with fits and starts, I would say. And so during that time, we saw a lot of other CDFIs get, really sizable investments. LADC, as a Latino-led or CDFI led by people of color, did not receive equivalent investments. And it always, and we have always tried to focus on really small loans, the most vulnerable entrepreneurs, small business owners, folks who really needed a hand up to get things going. We're trying to build our tech capacity, but don't necessarily believe fintech is the answer for the folks that we serve. So those are really our origins, and we've been really focused on our mission and trying to fill this hole that no one really likes to touch, because it's not necessarily sustainable. So we're really dependent on writing proposals, grants, and we seek to raise revenues that way so that we can accommodate the needs on the ground. And I would just say that our loans are actually down to 0% interest at the moment. So we've been trying to develop some recovery products to really help folks. So really trying to subsidize and help folks get out of the holes they're in right now.
Wow, thank you. That was a very rich overview. Not to be topped by Thiru, but he probably will, but go ahead. Hey there.
Hi, Jason. Hi, everyone. Thanks so much for having me. I very much appreciate allowing seniority to guide this initial presentation, because not only are we the newest among the CDFIs, I am also especially new. I was named the CEO of Capital Plus Financial just in the last couple of months. And I'm going to just share, if it's okay, 30 seconds of background, because I think it'll help provide some perspective on the perspective I intend to bring. I actually spent much of my career in the public sector. I was a lawyer by training. I served as Deputy Attorney General for Maryland, and then was a litigation partner at the global law firm of DLA Piper, where I frankly saw so many of the challenges that CDFIs have been trying to address for 2 generations. And I'm going to, if it's okay, focus on the part of the story about Capital Plus that, Jason, you didn't include, which I really appreciate, because I think the legacy focus of Capital Plus has been on expanding homeownership opportunities among minorities and Hispanics in a number of cities in Texas. But during the pandemic, as everybody here knows, and for the audience's benefit, Treasury ultimately allowed CDFIs to assist with PPP loans. And it was a very specific reaction to a very predictable problem, which was that banks were assisting people in getting PPP loans when we were talking about their preferred customers, which meant you had to be an existing customer. And then among the existing customers, you had to be asking for large loan amounts, which left out a huge swath of people. And Capital Plus partnered with a fintech. Marjorie, in this context, it was a vital piece of the story and ended up becoming the second largest processor of PPP loans in the country. 480,000 PPP loans were processed through Capital Plus Financial to the tune of over $7 billion. And important to that, over 80% of those loans went to companies and independent contractors and sole proprietors of color. And so it wasn't just that we were able to assist folks that needed PPP loans, that were entitled to PPP loans. They also happened to be the individuals that had been left behind the traditional model. You had hundreds of thousands of people that one firm, I'm here based in Baltimore, but we're headquartered in Texas, that was able to assist all across the country. This was a single moment, but it kind of crystallized and exposed what Marjorie said. You had to do a study to confirm that Latinos in DC were being, some of this is so obvious. We've known this for a generation, and we are still living the realities of it today. In 2020 and 2021, billions of dollars of money was given out, and only a sliver of the folks that were entitled to it got it at first. And then CDFIs were able to step up and play a really important role in filling in that breach. That wasn't the original design. Treasury originally planned on banks being able to do this work. And literally within a few months, they realized that banks were doing exactly what banks have done for generations. And Dion, to your point, the ability to innovate in a nimble way, to be able to change direction and modify products and realize the needs of a particular market was, I think, vital to the success story of Capital Plus this past year.
Awesome. Thank you. That's great. Really appreciate that. And welcome to the industry. Welcome to the family.
Thank you. I'm very excited.
Good. All right. Well, let's go to the next question. They get harder as we go along. Just kidding. So, we talked about when things got up and running, but I guess the real question here is that you have a dual. I think somebody mentioned this on a call earlier, but you have a dual challenge. You're working with the most underserved borrowers, and at the same time, your organizations have historically had inequities in terms of being able to access the resources you need to serve your community, right? It's kind of like a double-edged sword. So don't show everybody your scars, but it would be nice to know, like, over the years, what did you learn? What were the big ahas or the lessons learned? Or just share with us what did it take for a Black and Latino led CDFI to make its way to bang on the doors and get attention, to advance your mission and to have real impact. And maybe we'll mix it up and not have to worry about seniority, and we'll ask Dion, because Dion, your organization, your parent organization, right, has a very rich history, and you talked about the initial effort was to try to build the capacity of community-based, neighborhood-based CDCs in Cleveland and in the market. And then, Village Capital came in really to focus on the capital equation. So, I would imagine there's some story or some lesson learned about what it takes you now today, what you've learned in order to be able to make this work.
Certainly. I think if I were to be candid, which I usually am, so I'm going to be, so that's my full disclosure. If you look at many of the communities that we serve, whether it's North or South Carolina or DC or other places that this panel is working, the issues that we see in our community can usually be followed along the same maps as redlining and other historically discriminatory practices. They can be followed by immigration patterns. They can be followed by urban renewal. So what you are seeing in 2021 are symptoms, not problems. And so these things have never been resolved in our community. And so generational wealth gaps continue to grow. Communities that were disinvested 50 years ago are often even more so disinvested. And so what we are now seeing is really the cumulative effect of years of lack of care and concern about the most vulnerable people. And CDFIs, in spite of their Herculean efforts, are only one part of the equation. And we work with a number of partners, first on a policy level, and that is something that CDFIs have not been rigorously engaged in, I think, until in recent history. That no matter how much money we put out, no matter how much development services we provide, community engagement, that we really need to address policy issues in order to move the agenda. And we can change people's condition today, but we really need to change the environment. Black and Latino communities have been the miner's canary. We have signaled problems for years that there's something wrong with the environment. There is a pollutant in the mine. But when the canary doesn't come back, when it's dead, people just go on. And we are really trying to change policy levels so that we look at voter engagement, things that we haven't looked at before. We look at how do we talk about housing. We look at how we talk about chronic homelessness. We talk about employment and workforce development factors in ways that are beyond just our capital, but are about changing, literally changing the color and complexion of how people live. And so I think that's a bigger change. At the beginning of the sector, it was do good work, put out money, and go home at the end of the day. And now we are thinking very much more holistically about those things that have led us to become these alternative financing sources. So in the ideal world, we would put ourselves out of business because the market would value and respond to our community need.
It was very eloquent. And I guess implicit in what you're saying, though, Dion, is that more CDFIs should get involved in formal advocacy efforts in their communities.
I think we have. I think that is the change that we have seen, is that there has been more advocacy on a policy level and that we are driving more holistic outcomes. And Linwood has been critical in this across his career, but that is part of the initiative of the Alliance, is really to drive things from a ground level so that people are speaking in one voice and we can see collective change, not individual activities. That we have a movement and not a moment around equity for all people.
Well said. Well said.
If I could add to that, I think policy is very important. Influencing policy is very important. A classic example of that is PPP. It was not because that Congress had an epiphany and say we want to do the right thing. It was from, I think, the letter that we wrote, EBBC, Prosperity Now, and the African American Alliance of CDF CEOs, along with NACAB, began to say to Congress that, look, Main Street has been avoided. And so it was this unveiling and this constant bombardment of ideas and thoughts that you need to include the neglected part of Main Street. Main Street Black and Brown businesses, Main Street CDFIs who got the lift. The epiphany didn't make the billions of dollars that went to the CDFi Fund to transform small business in the midst of the pandemic. If that had not happened, Main Street small businesses would have been left out, neglected, and abandoned. And we would have seen a much larger increase in the number of closure of small businesses, Black and Brown, across this nation. And so I think you have to stand in the midst, shout, and sometimes scream about the inequities and inequalities that still plague this system. So the main point of the Alliance has been its policy advocacy work, whether it's new market tax credit changes, whether it's changes in SBA and this dismal record of 35% decrease in 7(a) lending for Black businesses, whether it's CRA and trying to correct some of the wrongs that the past administration has done. So it is policy, but more importantly, it's Black and brown organizations working together with the reality there is a cause for a just community, a just cause for neglected communities. In fact, $4.4 billion of our members deployed PPP loans across this state, this nation rather. So we are happy about that. I didn't mean to preach it a little bit, but I had
represent. It's all good.
I love it. I love it. And frankly, if you hadn't said it, I would have built right off of what Dion said.
Yeah, I had to. Yeah.
This is a great example, right? That happened because of advocacy. And now look at the places where it's not happening, right? When we're talking about rental assistance, still as of a week ago, only a quarter of the money has gotten out to the people that need it. When you think about the debacle that was the distribution of unemployment benefits, whenever we see these programs that are issuing money into the community, it wasn't that long ago when we bailed out the big banks and we said, well, next time it's not just going to be Wall Street, it's going to be Main Street too. Well, the next time is upon us. And I don't know that we're that much better than we were before. And if I can just add one other point to what Dion said about the structural and institutional and sort of legacy implications, it's not just on the front end of being able to access, for example, getting a home. It's on the back end as well. I just use an example here in Baltimore that was in the news this past week that I was personally involved in. There's a Black woman who's 68 years old, Miss Regina. She moved into the home in South Baltimore in 1957. When she was 18 years old, she helped her mom pay off the house. For 62 years, she and her family paid the taxes on that house like clockwork. In 2019, because of a medical situation, she missed one bill for $750. And the city of Baltimore, God bless my city, allowed them to sell that house from under her in a tax sale. And she ended up paying $2,500 in legal fees, and she still owes $1,100. That's ridiculous. And that's the kind of policy advocacy that I think we have to continue to work on, because we talk a lot about access and home ownership, but it's not just on the front end. This woman has been in her house for 68 years, 63 years. And we still have these policies that allow these predatory climates to exist at the expense of our Black and brown communities.
If I can add, sorry, Thiru, you should probably send this to her. We have a fund where we're helping Baltimore City residents pay whatever fees are just destroying their housing situation. So that falls within our range. So let us know. But I would say, yeah, I think advocacy is a really big thing. Over the years, I've had funders ask us, to remove it from our pitches, right? So we'll submit a proposal. We won't even mention advocacy within the work. It's like in our background information, and we're asked to delete it, right? And so it's just really sad and maddening. I don't know how you change systemic issues without advocacy. So there's really no money that's been poured into it. We've done it here and there, however we can, but it's not, this concerted effort that's needed. But it seems that some folks are coming around. We've also had, I think the philanthropic sector, the more traditional, just isn't familiar with entities like ours, right? So we've had some community foundations, smaller foundations reach out and ask, how can we invest in your loan fund? We don't even know how to underwrite a deal like this, So there's a growing interest, but there's definitely a pushback on advocacy amongst our funders, but I think things are starting to shift. I'm hopeful.
Marjorie, can I ask you why is that? Is there reluctance that that's going to get you in the middle of political controversies that they don't want you in the middle of, or what's driving their resistance to you engaging in advocacy?
Yeah, so it depends on the funder, right? The ones that are most reluctant are banks. And so what they've told us is, some of the advocacy you do actually is against some of our clients, right? So we're organizing tenants, right? And we're pushing back on landlords, and those are their clients. So they will ask us to delete all of these things, which I find really intriguing and sad, unfortunate.
Wow. Yeah, Douglas said years ago that power never concedes nothing without a demand, never has and never will. So until you stand up, speak up, and sometimes shout up, you're not going to see any systemic changes that we need across this nation for Black and brown communities. It's just a reality, especially the climate that we find ourselves in today.
Let me, we've got about 10 minutes. We won't get to all the questions, but a number of you have talked about some big home runs, some big successes. Just stepping back, what would you say you're most proud about in terms of working this mission and providing equitable access to your community? Let's start with Marjorie.
Sure. And our folks just touched on this. I think the thing I would say we're most proud of most recently would have to be our PPP lending during the pandemic, right? We're a small operation. Our loan fund is at about $7 million. Our average loan size is $15,000, right? We're dealing with really small, underserved entrepreneurs. And so, we were caught in a tough spot. We didn't want to get stuck on the sidelines, right? We didn't want to pull back and be scared and just wait to see what happens. We didn't even know how to use the SBA system, right? But we immediately, the executive team met. We decided really quickly, let's do this. And so we began we knew the national intermediaries were advocating, but we also knew that we had direct lines to SBA staff. So we leveraged those. And I was directly communicating with them, asking them, please let us do this. At the same time, we were fundraising. So in a matter of days, we raised $4 million. We leveraged our personal networks with bankers we knew, asked them to show us how to use the SBA system. And so got everything done really fast. We got no sleep, but we were just really proud. We financed 450 businesses, minority businesses in our area, which wouldn't have had gained any access otherwise, right? And these loans, on average, were about $20,000. So it was a big effort for us to do something like that so quickly, and it more than doubled the size of our loan fund. So that's something I would say that we're all really proud of, and it's actually just allowed us to do a lot of other things that we had not considered, right? So we launched a new department that helps local government entities deploy financial assistance grants to households and small businesses. So we're at about 80 million there, right? And we have all new technology, all new platforms to deploy those funds as quickly as possible. And we advise these entities on how to design really low burden applications, right? So helping them move away from what housing agencies have been doing. And so now we're entering into the housing space, right? So we're helping local housing agencies deploy their funds more quickly. So we're testing some models there. So we're just really proud of how it's impacted us.
Thank you.
Really
broadly. How about you, Dion? Oh, you're on mute.
Very sensitive screen. There's so many things that we are proud of, and Jason mentioned our program for minority and women-owned contractors to build their capacity in his opening remarks. But I think I'm going to say my proud moment in just a short story, that we make relatively large loans compared to some of our CDFI partners because we are financing real estate largely. But I made a loan for $16,000 to an organization that was buying a small facility, a house that they had converted. And that was just the last gap piece of financing that they needed. But guess what? They provide trauma-informed care in a community that has suffered a lot of traumas, from poverty to infant mortality to lack of employment opportunities. And that was the best $16,000 that I have ever deployed in my life. And that is just one of the CDFI stories. That's how we work. So it meant more to me than, a $4 million loan in a $60 million project. That was the difference, and that's why we do what we do, and that's why people should invest in CDFIs.
All right. We are, I have to apologize because I just let the conversation roll. I've been asked to take some questions, which I'll, of course, then throw back out to you. Someone has been asking, they're in California, and just to let you know, you're in California, you want to learn more about CDFIs, you can talk to the folks at the California Association of Micro Enterprise Opportunity, Cameo. They are a California association and they cover CDFIs. And so I would suggest you look for them to develop relationships between local CDCs. Interesting question. Any unique examples of CDFIs raising equity capital for Black and Latino owned small businesses? Equity is a tough one.
Yeah, it is. But I'm so proud of our members. We have a member in New York, True Fund, who has developed a equity development fund to really make equity investments, which I think is key into Black businesses within their service footprint. It is I think, a model that we like to see developed for other CDFIs in our network. That's something that we're going to work on, trying to establish an equity development fund that where our members can begin to be, I'm going to call it, difference makers and change makers and making equity. Businesses don't need more debt, right? And they need some equity type investment where there's not a takeover, but an investment that is trying to scale that business, which is a difference, I think. So there's some models out there, and I think we have to pursue it. Again, policy changes, right discussions, and using the Fannie Lou Hamer spirit, being sick and tired of being sick and tired. You got to go after it. You got to do it.
Also, just for folks on the line that are really looking to dig into this, you can go to the Opportunity Finance Network, which is the membership association for CDFIs, and that's ofn.org. And you can see who their members are around the country and initiatives they're doing. We can also certainly backfill in terms of your education about CDFIs and getting certified. Let me ask you this, just stepping back, and I want to start with Thiru, is let's talk about vision. Let's just, right, you're in the trenches. You've had a lot of resources thrown at you. You're scaling up. You're working, making sure you've got the systems and the people and the processes to move it forward, but you're doing it. 10 years out, what's your market going to look like? Thiru, what do you hope? What do you and Eric and your team hope to see moving forward?
So look, I'm 2 months in, so predicting where we're going to
have that figured out. Come on.
I want to sort of acknowledge a moment of humility in terms of understanding where we're going to be in 10 years. But I will say this, and it actually answers maybe the last three of your questions. One of the things that we're most proud of is not just that we had low low quantity loans. I mean, 480,000 loans, the average loan amount was under $17,000 during PPP. It would have been very easy to sort of rest on our laurels. And I think one of the things that I'm most proud of is it does appear that CDFIs, the industry, is one that is constantly willing to innovate and push. We just announced a partnership with Enhanced Capital Groups. They make investments in impact real estate, climate finance, small businesses, and we want to sort of deploy at a higher scale. I think 10 years from now, what we are trying to do is systematically, we're all trying to do this. We're trying to systematically identify long-standing barriers that fuel the racial wealth gap and tackle them. And at the end of the day, the traditional paradigms have just not done it. It does feel like we are in a special moment. We're making good trouble is fashionable. And so I do think that there is an opportunity because of the both political moment that we're in, the nimbleness and innovations the CDFIs have been able to engineer over these last couple of years to really systematically come down and tackle these problems. I think at the end of the day, we're at these conferences, and so grateful for you convening these forums and letting us participate, is we get to share these best practices. We get to share these examples of how we're approaching things in one market versus another, one problem versus another. I think that's going to be vital if we're going to get to where we're going to get, whether it's in 5 years, 10 years, or 20 years.
Awesome. Thank you. Any closing comments? I know we have to wrap up, unfortunately. I know we could just keep going here. It's a great conversation.
Yeah, I would like to remind the audience that from these esteemed panelists, look at the opportunities they are providing for left out and underserved Americans. And then if you use the principle, but for these organizations, what would those communities look like? That's my departing thought, which is, by the way, a positive thought, because that represents hope for housing, hope for construction, and hope for small businesses and housing counseling and those kinds of things.
Well said. All right. Well, we need to wrap up. I want to thank you all. I mean, bringing you folks on, you're very busy, but I couldn't ask for a better group of folks to represent the industry, the challenges you're facing, and the incredible hope and optimism that we all share, right, about the future. So thank you all.
Thank you. Excellent job.
Take care. Bye-bye.
Thank you.
Bye.
Thank you so much.
Position as I speak. So hold on for a few minutes. Pat, that was really a very good session that we just experienced.
It was very, very informative. I like what all three of them had to say, especially Third Rule.
Yes. Mina,
you look beautiful.
Yes, she does.
Yes. I love the red.
Yeah, I heard that was a power color.
It is. It's my favorite color too.
Yes.
Hello, Latrice.
Latrice is wearing the red also.
Yep. Say red is a power color.
Yes.
You're red too, Tina.
Yes. Someone told me
that. The memo.
I didn't get the memo.
No. Yes. So we're gonna get started in 2 minutes, but sure would like to recap what we just heard from the CDFI that was just speaking out. Jason Freedman, who's been our consultant for the last 6 months, really did a good job of presenting videos and all types of really good information. Okay, but I was really excited about that panel because, you know, it's clear that they are all very passionate.
Mm-hmm.
So, you know.
So, Quintana, are we live or we're not live? We're just in this, we're in a holding room.
We're live. So this is a good time to just ramble on, as I typically do. Yeah, and I think we're waiting for Bev Meek to join us. I know she was in the holding room with us, so hopefully she'll be on and with us in just a second. Let's see here. Oh, 12:59. I think I'm going to go ahead and get us started because I know that we all have some very hard stops. Bev is still in the holding room, so hopefully our tech team will let her out of there. She just texted me and said that, so God willing, we'll get her back here shortly. Maybe this will be a good time for me to start the introductions as it's 1 o'clock. And I thought that it would be nice if I did the introductions very quickly and use up 5 minutes. So forgive me if I took away your ability to introduce yourselves. And I think I thought about it this morning. And I said, I have known Bina Elliott for probably 15, 20 years. Bev Meek for at least 10. And Latrice, I'm just getting to know, but I'm so excited she has the same passion. I said, I have probably in 15 years made Bina extraordinarily crazy. No, but I like how she works. I like that you guys have trusted me and funded and supported and worked with me on all types of projects over the years. Okay, and Bina, we've done the WOW program with the Congressional Black Caucus, and Bina pushed for me to take that project, and we did an awesome job. I think we won a contest in the process.
We won the national award, and I thought about that a couple of days ago when I was talking to First Independent around home ownership and the challenges we have. When we started with the With Ownership Wealth program, which is WOW, we were focused on helping close the gap around home ownership, which we know, if you think about that title, With Ownership Wealth, home ownership is a great catalyst for building wealth for our families and our communities.
Yes, and it made all the difference. And Latrice is my new playmate, but I got to be honest. You guys are like family for me. That's why I said for Bina, it's like family. I mean, she knows my children, and we're going to come up with the subject of how do you build a relationship with a bank. But I think it was the work that I did that attracted you, and that's going to be the answer, I suspect, for anybody. People call me and say, well, how do you get to the banks? But they haven't really done anything, and they're not really doing anything. So that's the beginning. Latrice, who I've had the pleasure of working with over the last year, and we have just had the opportunity to put together and support this CDFI for one thing, okay, and we've strategized over how to grow the CDFI, and so Latrice, I really thank you for being here today. And of course, my partner in crime, Pastor Pat Pearson, who has been my neighbor and my nonprofit partner for many, many years. So I just appreciate you all. I'm not going to drag this out. I was hopefully buying us time for Bev to join us, and they seem to be. Oh, I got a text, Bina, just so you know, from one of my kids saying Aunt Bina. I was like, stop playing, right? Okay. But again, I reiterate, you guys to me are like family, because there's not been a time since we've started this process that I can't think of a time you've ever said no, Bina, just to be honest with you. Okay. But I don't come to you with craziness. At least I try not to. Okay, and Latrice is now on that page. She doesn't say no very well. I've not heard her say no either, right? Okay, so Latrice, if we've got, let's see, we've got about 6 minutes if you want to say something.
Sure, and I think there might be a small delay on my end, so I apologize, but I just want to say that I'm really excited to participate and want to personally thank you, Dina, and Pastor Pat, and Bina, it's good to see you. I think the last time we saw each other was in Puerto Rico at a conference that we were in together, and I had the privilege of listening to the wisdom that Bina speaks so eloquently often. But, Dina, at Huntington, we are really proud to participate, with this new CDFI. We were proud to come in even as like the first funders, because this is such a needed organization in Detroit. And so we're just excited to be a part of the work that you guys are doing. And you guys have our commitment that we're going to continue to recognize and support our Black and Brown communities. And so thank you again for having me. I'm looking forward to diving into some of the questions, and I appreciate all that you guys are doing.
Well, we're going to go ahead and get started on those questions, because, again, we've only got a 30-minute window here. And for the good news is, if we can get Bev on, we'll let her carry on beyond 1:30. How's that? Okay. So the first question, and again, this is sort of a free-for-all, because I want you to feel very comfortable in your responses. But Pat is going to ask question number 1. Sorry about that, Pat.
No problem at all. Good afternoon to both you ladies. I want to say I've known Bina for years when she sat on the board of Buff, and she has awarded our organization through our summer camps and through the years of our Diamond Girls program. So welcome, Bina, and thank you once again. And Latrice, I'm meeting Latrice. I'm getting to know her, but I thank her also for her funding for our program. And both of you ladies are beautiful, outstanding women that we are proud to have and to congratulate on the work you do in our community. The first question that we have is, what are the most effective ways in which CDFIs and financial institutions can work together? Bina?
Yeah, so CDFIs, which we call Community Development Financial Institutions, are really the lifeblood and part of the ecosystem for providing capital, both home ownership capital and small business capital for our entrepreneurs and for our homeowners, and being one of those alternative lenders that we know are critical to saying yes. So when you guys said, I never said no, I think I like to never say no to anyone. I like to say not yet. Here's what you got to do. Here's the things or steps that you have to work on. Or there's a different partner that can say yes when a bank can't say yes. And that's the role of our CDFIs. That's also the role of our MDIs, Minority Depository Institutions. And a lot of times our MDIs are also CDFIs. But I believe that the CDFIs are a critical part of the ecosystem around capital access. And more importantly, beyond the capital access component that they provide, is the ability to provide the support that is needed for our businesses to really flourish. And when I think about the CDFI's work and role over the last 2 years, they were a critical part of PPP lending. And while their job was hard before, the role that they played around helping our small business owners and even mid-sized business owners not only survive through COVID, but thrive and pivot their organizations and their businesses to really be positioned to manage through COVID and come out on the other side. The data said that we lose more than 40% of our small businesses, Black and brown businesses, because of COVID and that business interruption. And we're coming close to that number, but I have to believe that had it not been for our CDFI programs and partners, we would have had a much bigger loss of our Black and brown businesses. They were the lifeblood for our communities around helping those small businesses access PPP. They might have been a direct lender of PPP, but they also work with them around now what? After you've gotten the PPP and you've been able to have a temporary stopgap, how do we help your business pivot? How do we let you come out on the other side, not only, surviving through this, but starting to thrive? And so I really can't think of a better partner around the ecosystem for small business and home ownership than our CDFI partners. And our role from a bank perspective is to continue to support that through capital investments in CDFIs, whether it's equity investments, whether it's investing in your loan funds. You all play a critical part as CDFIs in helping provide access to capital, and you are a critical component that we need to continue to invest in and scale. We just had a meeting internally at JP Morgan Chase, and I said, CDFIs make up about 10%, if that, of lending for all the small business loans that are made. But I think the potential for CDFIs is even greater than that. And the way we need to do that is think about how we scale them.
Okay,
Absolutely.
thank you. Absolutely. Yes. Latrice, would you like to answer that?
Sure. I'll just, echo for sure. Vina, she's absolutely correct, and she hit all the points. And I think a lot of what we were going to talk about is going to be very similar. But I just want to add, that CDFIs are vital to our communities and as an industry, right? And we as banks, I feel like we have a moral obligation to strengthen and support the CDFIs and the communities they serve. CDFIs have an important view that banks don't always have, right? They are in the community, working with the community members, researching, understanding, things that prevent access to capital. And it's important that we stay connected to CDFIs so that we have an idea of what's going on. I know here at Huntington, we recently announced our $40 billion strategic community plan to address issues of social, racial, environmental, and economic inequities. And honestly, we can't address those issues without our CDFIs, right? And especially here in Detroit and Wayne County, where we have $1 billion to help provide access and information, right? And we really need our CDFIs involved to help us understand the needs of our communities here in Detroit and across our entire footprint.
Okay. Thank you, ladies. Thank you, ladies. We have Beverly that's just joining us. And I don't know, Beverly, if you had the opportunity of hearing the question that was asked.
Actually, I did. So I'm happy to jump right in if you'd like, Dina. So I believe the question was, what are the most effective ways in which CDFIs and financial institutions can work together? And the key word here is effectively. So at Flagstar, CDFIs are part of a broader investment strategy that includes investments in minority deposit institutions. CDCs and also CRA philanthropy. And I think
Bev, we're running into some technical sounds on you're breaking up and we cannot hear you. I apologize for that because I certainly wanted to acknowledge Bev Meek, who I also have worked with for many, many years. And I want to clarify something while we're trying to get Bev's voice back. I never ask the banks for crazy stuff. When I say they never say no, they never say no because we don't ask for stuff that doesn't make any sense. Right. Okay. It's usually in their mission. So I want to be clear to the audience, don't call because you want to get your nonprofit has never done anything and can't get funded. Bev, can you hear us? So we have no sound for IT people for Bev. Can we please help her out with that? I'm going to move on to question number 2, if that's okay. And that is, what do banks expect from CDFIs? What do you want them to have already done before they get to you?
Latrice, I'll let you take this one first.
All right. Well, honestly, let me just say this, because CDFI's sole focus is in the community, we want the mission to be dedicated to, providing affordable lending options to low income and underserved communities, right? So we want the mission to be clear and the goals to be clear with that CDFI. We also want our CDFIs to be able to communicate effectively what the needs are, right? Like, we can't fill a need if we don't know what it is. And so sometimes, I think we forget the importance of communication, and hey, we should be working together. Like, CDFIs are important to banks and banks are important to CDFIs, right? So there should be a mutual understanding of what's needed in those communities. Obviously, our community partners play an essential role in improving financial stability and the quality of life for people and small businesses in our community. And I think it's just a collective effort to provide these resources. And I think that if we're all on the same page for mutual understanding and a collective effort, the communities that the CDFIs serve, we can create financial stability and a quality of life, right, for those folks. And, I think transparency is another thing. Again, we want to know what's going on so that we can help. We may not be able to fix the entire problem, but we may be able to convene other people to the table to help support the mission of a CDFI.
Yeah. So I echo and double click on what Latrice just said. The one thing that I think is important, though, is that CDFIs, because they're a financial services institution, they're just a community development focused one, is a strong track record around lending, or even if you're not a direct lender, that track record around engaging clients that you want to serve through your CDFI are important. We want you to have a really strong track record of already doing the work or serving that population and being connected to it. A strong balance sheet, or one that with some good projections around how we can invest capital in your CDFI to lend. Also, a really strong way that you can support from a technical assistance perspective those small businesses. Some CDFIs are just lending houses, and that's great, especially if they're meeting a niche. But if you are just a lending house, you do need another partner with you, a technical assistance provider that can really help support that small business. Because besides the capital, businesses need the help. They need the resources now around how to develop a contract, marketing, strategies, how to make sure they have a strong balance sheet and income statement, that they're getting ready for capital in terms of their positioning. So that's really important, that you have a strong technical assistance arm or partner. And then lastly, I would say, is that we want to make sure that we have really strong reporting with our CDFI partners. We want to understand exactly how you're meeting the credit needs of the community and what the gaps are. Because at the end of the day, when you think about that ecosystem I talked about, eventually we want those CDFI customers to be bankable customers. And how are we helping that customer get access to the next level of banking or next level of capital, whether it's VC, traditional bank, term loan, or term debt, or other ways? How are we helping that customer move along the continuum around that capital access component? And so I think that is a critical component, is the data that we keep, the research, and the gaps in products or services between what a CDFI offers, what other forms of capital are available, and what the banks are offering, so that we can have a really comprehensive ecosystem for capital.
Thank you, Vina. Thank you, Latrice. I want to point out the obvious. Clearly, these are very strong African-American women, and they have very high leadership roles inside the banks. And so I want to acknowledge that, because they didn't just start yesterday. They worked their way up, and they are decision makers. I'm very proud of them, because, they have taken the opportunity to help their community, and they never stop. So I just have to say that, throw that in. Bev, have you had any luck joining us, Bev Meek?
I've called in. I don't know if you can hear me.
We can hear you. We can hear you.
Good. Great. So I'll just go with that first question. I didn't hear everything that was said. I was trying to sign in. But in terms of just the most effective ways in which CDFIs and financial can work together, again, I believe that the key word here is effectively. At Flagstar, CDFIs are part of a broader investment strategy that includes MDIs, or minority deposit institutions, small business investment corporations, multi-investment funds, and LIHTC, and CRA philanthropy. And I think the CRA philanthropy piece is very important because there's a lot of CDCs and CDFIs out there who are providing small dollar lending to their clients in neighborhoods, and that's an investment, an important area and need. So we view these investments as an extension of our product line, and actually we really consider it an enhancement to our product offering. So you can think of creating a seamless, waterfall of products to serve a variety of lending needs across the spectrum of community, specialized purpose issues, and also addressing high risk. Also, when we're working with CDFIs, we like to be aligned with the need and the mission of the CDFI. So one of the ways we like to look at a need is to identify the weakness in that specific ecosystem, whether it's affordable housing, economic development, or services, and then working with our CDF partners to create intervention strategies to support the system. And that allows for our ability to support and move the pipeline forward. For example, helping small businesses from startup to self-sufficiency, sustainability, and then mainstream financing. And that helps to just really strengthen that pipeline and move people along, because you don't want to keep businesses and organizations at a stage forever. You want to move them through the process to the next stage so you can help more people. And that's why I think the communication between the CDFIs and their banking partners are so important in this process. And quite frankly, having this type of forum and conference, I want to thank Al and Dina for this, because it does help us understand the gaps, some of the needs, and nuances in the entire process so that we can make change.
Thank you, Bev. Thank you for that information. And I know the clock is ticking, but if you would, but both of the three of you wouldn't mind just telling us your titles at the bank.
Sure. I'll just, my name is Beverly Meek, and I'm CRA Director at Flagstar Bank.
I'm Bina Elliott, and I'm head of Advancing Black Pathways at JP Morgan Chase, but I am a former CRA officer, so I've spent most of my career in community reinvestment.
And I'm Latrice McClendon. I'm the community president of Detroit, and I've spent most of my career in community work.
So one thing I would say, Dina, that's important, because we are at a Black and Latino Economic Summit, is the work that we are really pushing hard on at our respective organizations around increasing the capital access for Black and Latino, or Black and Hispanic businesses. And at JP Morgan Chase, it was actually launched in Detroit, our Entrepreneurs of Color Fund, which was a program that was specifically meant to provide underrepresented communities access to capital and be very intentional. So to access our Entrepreneurs of Color Fund in Detroit, you had to employ 50% or more of your staff had to be diverse, or you had to be a diverse owner. And being very unapologetic around how you center capital to be very intentional to drive and move the needle for our communities. And that fund, Detroit was the first place we started it, has resulted in us launching 5 other funds. Now just was in Atlanta last week to launch our 6th fund. But that intentional capital is important, and we have to really be focused on how we ensure that the capital access tools that we're talking about really land in the communities that are underrepresented, like Black and Latino, and in a way that allows us to be very clear around the intention around centering resources to communities that have been disadvantaged. When we think about the number of customers that we have to decline at a traditional financial institution, it's about double what we have to decline for our white counterparts. We know that there's a capital need that we have to be very intentional around providing different access points for.
Yeah, I think that's also important too, Vina. We about a year and a half ago, we started a new community development lending and investment unit focused on debt and equity and LIHTC investments. And we've done about 6 loans so far, but we were very intentional about working with African American and Latino and other ethnic races in terms of developers. And so 50% of our portfolio at this point is with Black and brown developers. So we're really proud of that, and we're moving forward with that intentionality in terms of race.
Yeah.
Go ahead, Latrice.
Yeah, I was going to say, I'll add to that just because I think this is a good moment. And I'm so proud of the work that the other banks are doing, and even the leadership from Bina and Beverly, who I've met both, and they're just outstanding women. But same thing, we've built in our $40 billion community plan, a $16 billion commitment to social and racial equity, right? And these things matter. These commitments matter. And, I'm fortunate to be in a situation where I'm able to help make sure that we're carrying out our commitments to our Black and Latino community. So again, Dina, this has been a great moment just to spend with all you guys, Pastor Pat, and I know the work you're doing in the community, right? And,
Right.
Just being able to work with organizations like the Black and Latino and Dina's organization and Pat's organization. Listen, it drives me to a level of passion I've never experienced before when working in community, being able to bring resources to the very communities that I've lived in and I've worked in. So thank you again, guys, for this opportunity.
Yeah, so I think we need a screenshot, right? Because this is a moment we probably never thought. I won't date myself. So when they said they worked with me for a bunch of years, I was little. I was just a baby, but I'm just joking. But it's a moment for us, right? As women
Yes,
of color
it is.
in our Black community, that we can talk about and center this discussion and be really clear around being intentional and be okay with it. And so I'm really excited about us being able to have a conversation like this, to be really clear around how we serve communities and why it has to be intentional, and know that when you serve the least of these, which are when you look at all the stats around business, number of employees, revenue per business size, Black and Latino and Hispanic businesses are at the bottom. But when we serve them, it absolutely is a multiplier effect. And it also moves the tide for every other underrepresented group in our country. So when we do this and do it collectively, right? It's not just one of us or two of us. It is a movement in our industry around how we can center the discussions and make sure that we're very intentional in the outcomes and be rigorous in the transparency and the reporting and the tracking to drive the initiatives forward. The announcements are great and the pronouncements are great, but the outcomes are really important. And I'm glad we're in the room, in the seats we're at, both on the advocacy side, on the partnership side, and inside our corporate doors, being able to really articulate and drive better outcomes for our communities that we all want to see prosper.
Absolutely.
Yeah, I totally agree. And I think by now we all realize we can't do it alone. It really takes trust, strong partnerships, community, and government. And to my sisters on the screen, I think it takes us working together too. I think we need to do a little bit more of that. And for one, I will certainly, reach out to my colleagues here and start thinking about, how we can work together, especially in communities and the areas where we overlap. So,
count us in, Deb. Count us in, because it makes a difference when we all collectively work together to bring
Absolutely. You guys said there's such a powerful statement, and I've always been focused on results. Okay, that for me, I don't like any project that we do that garners 3 people that got a house, and that over the years, my testimony is that I educate probably 60 to 100 families a month. Okay, I'm very serious about results. And the one thing we're going to be calling on institutions in the next few years is the fund groups that are getting the results. I'm really tired of seeing us on the bottom.
Yes. Yes.
Okay.
Absolutely.
Yep. We may not get to our last question. Sorry about that, Pat.
No, that is fine. I want to thank each presenter, Beverly, Latrice, and Bina. We thank you. Thank you for your time this afternoon and answering the questions. We thank you for your representation of the banks and giving us some knowledge this afternoon. It is a privilege to see African American women across this screen presenting this afternoon. I agree with Bina. I never thought I would see this. So I'm honored to be here myself.
And I also want to announce before our audience ends, we got a chance to end a little early, thank God. But on November 9th, the next event is on Tuesday, November 9th at 11, and it's going to be very powerful. The CFPB is going to be speaking. That's the Consumers Financial Protection Bureau, and they're going to be talking about the 1071 new regulations that are about to come out that directly affect people of color. So I encourage you not to miss November 9th at 11 a.m. Looking forward to seeing you. I'll be there. God, I always have to say this, God bless you all, because your work speaks ahead of you. It's been so powerful. I know that's Pastor Pat's line, God bless you, but I stole it. And I look forward to continuing to work with all four of you. So thank you so much. Yeah, it's 1:30. Keep us in your prayers.
Thank you.
Thank you, ladies.
Take care.
All right.